Good morning, good afternoon, and good evening. It's Thursday, May 25th. We're almost at the end of the month. Wow. And welcome to our latest episode, episode 78, NVIDIA-STIC. So
Oh, yes.
this is Mark Yu,
Wawi Santos.
and welcome to the Mark Yu and Wowie show. So just a quick disclosure. We are both medical healthcare practitioners here in the US with a passion and interest in investing our hard-earned money in the stock market. Do not consider anything you pick up from this podcast as an investment advice, as we are not registered financial planners. But anyways, we go take a look on a weekly basis, or at least we try to see the trends in the overall stock market and what's happening. So we always take a look at the sentiments and fund flows, which is always, a helpful fact in order to guide us in our investment. So both of us are straight out of work, and we appreciate you guys, whoever you guys are tuning in tonight. So NVIDIA-STIC. So how come we put that on our title today? What do you think? Why?
Because it's fantastic. It's going up, skyrocketing.
Yes. So based on its recent earnings report, it blew out earnings expectations by Wall Street. We're going to take a closer look at its numbers, its boring numbers in a little bit. But according to this company's marketcap.com, actually it's the sixth largest company now in the whole world. Its capitalization is $939 billion. And today alone, it increased by 24%. Yesterday, it closed somewhere around $600 billion, but it gained nearly $200 billion more in just one day. Just to put that in perspective, it gained about a size of a McDonald's in one day, or a size of Cisco in one day, a size of Toyota, a size of Nike, even more than that. A size of Walt Disney and a quarter more, a quarter and a half of Netflix. So that's a lot of value just in one day. So are we saying it's a sell right now? Well, I don't know. I myself, just a disclosure, I have it in my portfolio. A little less exposure to it because I already thought that we have reached a peak back in February or March when it already had doubled in value. So I wish I didn't, but hindsight is 2020. I could have hold on to that and earned a little bit more, but it's up 165% or triple since the start of the year, from $143 a share to $380 a share. And today alone, it jumped 24%. So for those who have ridden the stock through its ups and downs, congrats to you, because it's not been a fairy tale ride. It's been up and down. At one point, it was down 34% from August to October last year alone. And from December to early part of this year, well, from December to December 29th, it was down 13%. So congrats to NVIDIA shareholders. And hopefully, it pulls itself and maintains this uptrend. But I don't know. It's been already quite a feat so far this year. Were you able to enjoy this ride, Wowie?
Yeah. I got NVIDIA last year, May 25th.
Oh,
And
nice.
so far, when I checked it this morning, it was up 135%.
That's perfect. A lot of gains right there. So
Yes, unbelievable.
yeah, if we're gonna take a look at this valuation, so 900 billion, like what we just said, it's a valuation perspective here. It's forward price to earnings gap, which is the general accounting principles, accepted principles. Forward is 92 times. So that's on the pricey
Wait,
end. their peers, their median price to earnings forward are 23 times. So that's a big jump there. Its price to sales is 25 times, whereas its peers is nearly 3 times. Its price to book is 34 times. Forward price to book is 27.6, where its peers are at 4 times. So if you're buying at this point, you might want to take a second look because you're paying at the peak. Right now it closed at it's near its all-time highs. So it may be a risky point to enter right now on the stock if you're feeling FOMO. So I don't really advise that at this point in time. So looking closer at its first quarter values results, it's actually a little bit of a downer if you're going to take a look at it closely. Its year-on-year growth, it's not even growing. It's down 13% in its top line or revenue from where is this? Year-on-year, it's from $8.28 billion. It's down to $7.19 billion. And its profit, this is what's enticing, I guess, for most investors. It's up 26% from 1.4 billion to 2 billion, up 600 million more. And one thing to note is I think they're projecting a huge amount. See, for their outlook for this quarter, this coming quarter, they're expecting $11 billion. So that's more than what it registered for the first quarter last year, for the fourth quarter of last year. So that's probably why investors are loving this projection. So should it not meet the $11 billion plus or minus 2%, so maybe 98.98 times 11, so that's like $10.78 billion. Watch out below. A good warning right now, as early as now. If they don't meet that $11 billion forecast, might see some correction real quick. Because if you're gonna take a look at NVIDIA's chart, it's actually up and down. See, back in November of 2021, it was at $329 a share, and never looked back for the next year, and then some. It was down 66% from that peak. So I'm not forecasting a top right here, but just watch out. So looking at its balance sheet, which we love to take a look, it has 15.3 billion in debt. And if we're going to take a look at its debt, 9.7 billion in debt long-term plus short-term 1.2, 1.25 plus 9.7. That's nearly $11 billion in debt with $15 billion in cash. So we can say on this podcast that the company is pretty much fluid. It has a lot of cash at hand. So not a bad deal, right? I mean, not a bad take on its balance sheet. Really strong balance sheet. So now we're going to take a look at the National or American Association of Individual Investors survey, just to take a sniff where investors are at in terms of their perception, where the market will be in the next 6 months. So as of yesterday, 27% thinks that the market will be up, 39.7% thinks that the market will be down, 33% thinks that the market will be flat. This is almost the same, the bearishness, as compared to last week. And bullishness still at the low, little bit mid-20s for the past 4 weeks. So not much of a bullish sentiment despite the recent crazy uptrend of NVIDIA. So for the S&P 500, it's actually down. Wow, for the past 5 days. I'd be surprised to find this out just now. Negative 1.26% for the past 5 days. While if we're going to take a look at NASDAQ is flat. Wow, 0.09 for NASDAQ for the past 5 days. Interesting. The volatility for NASDAQ is actually up nearly 13%. Wow, for the past 5 days. Volatility for the S&P is up 20%. Wow, that's pretty interesting, right, Wowie? Whenever we see those type of climate volatility, we typically see a massive drop on the index, but not this time.
Yeah, people are not worried about the debt ceiling.
Or maybe that could be it. Professional investors are trying to hedge their portfolios, buying volatility, but in actuality, the markets are not doing nothing. Even like yesterday evening, I heard last evening, we heard Fitch thinking about downgrading the entire nation's, the United States debt position, which is quite interesting for them to say, meaning that they have a little bit less trust in the government to pay their bills on time.
It's kind of like catch 22. If they invest in high treasury yields, you know, treasury bonds, it may go down when, if the ceiling is not raised. So it's
True.
like they can't move.
So that's gonna be we're closing in. We're May 25th, and Janet Yellen said what could the United States would default on the first, as early as the first, and that would send crazy volatility in the market. Maybe that's why a lot of volatility people are buying volatility right now. Thus the outperformance, 20% in the past 5 days. I myself don't know how to buy volatility, so I'm happy to know that that's my limitation right there. Because if you're gonna take a look at the volatility, it's just up and down, up and down. A lot of roller coaster ride. I don't think it's a good recipe to be included in a conservative portfolio.
Mhm. But looking at the latest quarter, we're seeing a lot of improvement on the communication services and
True.
consumer discretionary.
True, exactly. Yes. FactSet, by the way, came out just today with an infographic. So for those who are tuning in via YouTube, you're in for a treat. This is just an infographic, but provided by FactSet. So earnings by the numbers for the first quarter. There are 290 mentions of inflation provided by all the S&P 500 companies. 290 times. That's the hot topic. Like you said, Wawi, the top growth sector is consumer discretionary. They are the group that reported the highest earnings growth of all 11 sectors at 55%. So if we're going to take a look at its performance since the first quarter, since the start of the year, yep, because of that, they're actually up as a group, 6.97%. And technology by itself, 20%.
Mhm.
That's
Yeah,
well, oh sorry,
that
that's for a 1 year
mostly in
performance.
yeah, mostly information technology.
Yeah, but for year to date, here we go. Year to date, Huawei. Technology is up 28%, and communication service is up 27%. Incredible comeback
Mhm.
from last year's incredible pullback.
Yes.
So yeah, 81 in terms of guidance provided negative EPS guide, the highest number since third quarter of 2019. So a lot of companies are still projecting negative earnings per share returns. Negative 2.2% in terms of earnings decline, which I could believe I could say that this outperforms or outperforms the expectations by some of the Wall Street banks like Morgan Stanley that was saying that we were in for a deep earnings decline. So I'm pretty sure those bearish investments haven't turned out great for those who have followed closely the sell signal provided by some Wall Street banks. Believe it or not, 78%, more than 3/4 of S&P 500 beat earnings estimates, earnings per share estimates. This is above the 5-year average of 77%, which indicates that we are on a good track, actually, in terms of meeting expectations. And another article by John Butters from FactSet, he actually said that fewer S&P 500 companies discuss recession on earnings call. And it's been fewer for the third straight quarter. So as of second quarter of last year, 238 companies cited recession in earnings call. On this graph right here, it's been downtrending. 238, 184 mentioned, 147, 107. So despite a rampant call for for recession, looks like companies, specifically the 500 largest companies in the US, don't see it, or fewer of them see that coming. That's in comparison from the Fed, because the Fed actually forecasts a recession coming in any, a soft landing, a hard landing, whatever landing. It's coming up pretty soon, but a lot less companies are seeing that. In terms of industries, a lot of mentions of recession are from the banks. Obviously, a lot of them, in terms of history, have went bankrupt recently, followed by industrials. And technology don't see, or hasn't mentioned as much. Healthcare don't see recession. Well, they always get paid, Pharma companies and insurance, they always get paid. They even get paid before us. They take their share, the insurance companies, prior to us getting our salary. So I'm surprised that real estate don't see as much recession despite their very poor occupancy levels in terms of office space and stuff. Oh, there you go. In terms of earnings calls, here we go. Real estate. Yep. Alrighty. On we go. Now we're gonna take a look at the fund flows. Where's the money going? So this is as of a couple of days ago from Reuters. U.S. money market fund assets hit record highs despite debt ceiling fears. Wow. So this has been ongoing since the start of the year, as we have been covering this in this podcast. The money market funds have hit another record high, nearly $6 trillion this week, as investors continue to turn to the short-term debt securities. Money market, key source of short-term corporate and municipal funding, have enjoyed $615 billion in net inflows so far this year, with 48 billion of those just in the past week. So I guess investors are betting that the United States, the White House, and Republican lawmakers and with the Democrats would agree on the 11th hour that we won't default on our debts.
It'd be like 2011 again, when we were in the same situation.
True, exactly. As you mentioned that, it's stated here on Reuters. The 11th hour 2011 debt ceiling deal caused the S&P 500 to downgrade the U.S. credit rating system for the first time. Investors pulled $66 billion out of money market funds, which at that time held around $22.6 trillion. Investors move much of the cash into bank deposits. But the problem now is investors are afraid of keeping their money in bank deposits, because there's been an ongoing run because of uninsured ones on these large or supposedly well-heeled consumers, bank customers. Regardless, will we see this pulling out of money if ever we go to the 11th hour on the last day of May? We have to.
Some investors are putting their money on certificates of deposit.
Yeah, CDs, bank deposits.
you know, to hedge against the unknown.
Yeah, I think we're less than a week from that. May 25th, 26th, 27th. So, yeah. 1, 2, 3, 4. 4 working days left before we figure out if we're gonna default or not. Fear and greed index, we are at greed, 63. A little less than where we were a week ago, 67. Market momentum, we're still on the positive side. Way distant, about 120 points from the 125-day moving average. Volatility, we already checked that out. Fund flows, yes. I was going to take a look at the Mega Cap 5 provided by Yardeni, but this doesn't include NVIDIA. So I guess he needs to update this. This was updated about a week ago. But yeah, it's just showing that Microsoft, Apple, Google, Amazon are very profitable compared to the rest of the S&P 500. So let's close that. NVIDIA. So this is just an amazing chart. That spike right there. It's like a complete V shape. Whoop. Just ever going up. I don't know why. We have a feeling that they might not hit their $11 billion estimate for this quarter because of just AI. What do you think, Bobby?
Well, a lot of it is driven by hype because there's a lot of interest in AI technology. But they're forecasting, higher earnings. So we'll I don't want to take any risk. That's what I'm thinking. I'm thinking about selling, some of my shares at this point while it's high. I think it's risky to get in right now. I'm kind of like you. I think the demand might be there, but I think the valuation is what's gonna keep me away.
Right. Yep. For the ETF that holds NVIDIA, iShares Semiconductor, it's SOXX. They're up 6.66% today. They're up 3.48% for the past week, and they're up 33% since the start of the year. Their biggest holding, no surprise, 10% is NVIDIA. Almost 750 billion of their capital is invested there, followed by Broadcom, AMD, Texas Instrument, Qualcomm, Lam Research, Intel. I don't think Intel is even performing this year. And let me check.
No, I don't
Intel
think
is
Intel not
yeah,
performing very well.
Intel is actually down 5.5% today. It's down 7% past week, and it's up 2.51% since the start of the year. Another stock that I want to take a look at is ASML. It's one of the big chip makers out there. This is where TSM actually gets their machines to develop their chips. It's up 6% today, 1.5% since started for the past 5 days. Up 29%, not bad since the start of the year. Not bad. And Taiwan Semiconductors, just to take a look, let's see where it's at. It's up 12% today. Oh my gosh. Up 9.5% for past week. Up 36%. I bet Buffett is now thinking that he should have not sold Taiwan Semi in the last quarter. He bought it and sold it in a quarter span. So, but that's all good. He has Apple anyways, so. All
Well,
right.
even Synopsys is going up. I think every
Synopsys.
chip maker is going up because of this.
Yeah, because of NVIDIA-STIC.
Yes,
So just a
it's what's shifting the tide for the
right.
short term.
And guess who missed the ride? So
Uh,
Kathy Wood, she actually dumped a lot of NVIDIA Just
She bought a
before.
lot of Palantir.
Oh,
Mhm.
yeah. So she dumped a lot of NVIDIA, missing around 200 billion in gains. Well, it's not apples to apples comparison. She's been
Mhm.
left out mostly because of she got out back in February. So she got out because of the earnings, the forward earnings. She said that 50 times forward earnings was very high. But right now
Mhm.
we're at 90 times already. So that's
Yes.
one thing. Uh, So she still has some in other portfolios. ARKK, trim that position. Okay, in October, she started to recover from ARKK held over 750,000 shares. She trimmed that position to just under 39,000 in late November and slashed it to zero by mid-January. So she totally missed the ride, I guess. Anyways,
Mhm.
so
Well,
this,
it's really risky. I won't be surprised if Nvidia's price goes down tomorrow.
yeah, I won't be either. But, wherever it goes, it's all good. So this is one thing I just want to quickly touch before we end our podcast. Europe stocks. So Germany actually entered a recession as of yesterday. But what's interesting is its DAX index, their index, 40 major German blue chip companies in Frankfurt. So I just want to see where it's at for the past 5 days. It's just down 2.7% for the past week. And since the start of the year, it's actually still up 12.6%. So I don't think going into a recession is harmful to the overall stock exchange, as being proven here by Germany,
Mhm.
which is an interesting finding. One would think that I would assume that, the stock index would probably go into the dumpster, but actually it's not occurring right now.
Mhm.
So 0.25, Europe's biggest economy in a technical recession right now, is just down 0.25% on that day, and it's still up 12.6. So that's one thing to consider if anybody is wondering what a recession would do to the
It's
index.
probably gonna happen to the US stock market as well. I
Yeah.
mean, the US economy, the same thing.
But the thing is, while we're here, they just published this afternoon that the first quarter GDP of the United States was revised up as corporate
Oh.
profits give way. So we actually gained a little bit more. The GDP was corrected 0.2% positive to a gain of
Mhm.
1.3%.
Oh, that's very good.
So I don't know.
Wow.
All that recession calls, I don't know. Maybe
Mhm.
Jerome Powell would be happy to see this, that he could still further hike rates. Oh, look at that, Wawi. Last time
Mhm.
we
You're
were looking at this, it was 80 and 20 here. The probabilities for a June 14 Fed rate hike. Now it has tilted
a little bit higher.
51%. Yeah, are asking for more, 25 basis points. They're thinking that the Fed would, oh my. So I guess we won't see any no Fed hike, but we didn't do any rate hikes previously, right?
No, we did no, we did point 20. We did 25 BPS last time. And we're hoping for a pause, but they did not. So people are expecting a pause in June, but looks like it's not going to happen.
That's crazy.
Mhm.
All right, so we're now forecasting a 25 basis point hike.
Yeah, some analysts are expecting the rates to go up near 7%.
Yeah, this is pretty bad because, yeah, As of today, the 30-year mortgage is at 7.12%.
It's
So
gonna go higher
we
if
breached
they
the
increase it.
7% mark back in 23rd, a couple days ago. So we're up there, way up there.
Last time it was up there was in the early 90s when I first came here.
Yeah. It's pretty up there. Okay, well, I guess we just have to tune in and see whether the United States seals a deal. And
Mhm.
hopefully they do it before our next recording. And United States is still intact.
Well, it has never happened before. They have not defaulted before, but we'll see. Um,
Uh,
interesting times again.
right. Well, I guess that does it for today's episode. Thank you, Wally, for joining in, fresh from work.
Yeah. Thank you too, Mark. You know,
Yes. Well, we do this on a weekly basis, or we try to. At least we get some information we can review and see where the market's headed, and hopefully it stays afloat. Or if anything, everybody should at least be prepared. If
mhm,
anything goes down the drain, a correction because of the debt limit not being made. But
mhm.
regardless, for those uh
That's
for those who
so
are
far.
oh
So far, the first quarter was good,
oh,
and
yeah,
this second quarter is also good.
yeah. Well, watch out. NVIDIA, those who are buying right now, FOMO, careful out there
Mhm.
because they're
Oh yeah.
projecting a lot of gains, 11 billion in revenue. Should they slip from that expectations, watch down below. All right.
Mhm.
Thank you guys for tuning in. Appreciate your time, Huawei. And I guess that does it. This is Mark Yu signing out.
Wawi Santos, like and subscribe, viewers and listeners. Thank you.
Thank you guys.